Hello students, today we will discuss a previous year question that came in the accounts exam held by the Assam Higher Secondary Education Council. So the question here is, distinguish between the following, the capital expenditure and revenue expenditure. So this was a question having three options, that is capital expenditure and revenue expenditure is the first question here. So we will discuss it in details. The difference here is capital expenditure and revenue expenditure. We have to make clear distinctions here. But before that, we have to understand the concept. What is capital expenditure and what is revenue expenditure? See, in the definition here itself, because we have made differentiation on the basis of definition, the definition here says that any expenditure incurred for acquiring or increasing the value of fixed asset or enhancing the earning capacity of a business is known as a capital expenditure. So this is what we call, this is the definition of capital expenditure. But if we have to understand it simply, capital expenditure is expenditure made on purchasing assets, or those expenditures those are mostly heavy expenditures, we can say, expenditures of huge amounts, and they enhance, as mentioned here, they enhance the earning capacity of the business. That is, suppose if we buy an asset, if a business buys a machinery, it will increase the earning capacity for the business because it will produce more goods, and that selling of that goods will earn more revenue for the business. So that becomes a capital expenditure. So example is buying of machinery. So that is why it is said any expenditure incurred for acquiring or increasing the value of fixed assets. So capital expenditures are mostly concerned with fixed assets. Now, what is revenue expenditure? As the definition says, any expenditure incurred for the purpose of carrying out day-to-day business activities and maintaining the existing earning capacity of the business. So revenue expenditure are all those expenses that are made on day-to-day operations of a business. For example, payment of salaries, buying raw materials, these are related with the operational activities of a business. So these are the expenses made on a day-to-day basis. So all those kind of expenses are known as revenue expenditure. That is why it is called or it is said an expenditure incurred for the purpose of carrying out day-to-day activities of a business and maintaining the existing earning capacity. And what is maintaining existing earning capacity? Like, for example, payment of salaries, payment of rent. What does these expenses do? They maintain the earning capacity of a business. Suppose if the employees are paid monthly, what they do? They will work for the organization and they will maintain the earning capacity of a business. The next point of distinction that we have is nature. What is the nature of these two? The first, capital expenditure. It is the nature of capital expenditure. It is one-time investment in long-term assets. That is, capital expenditure is a one-time investment and they are done again in long-term assets. As I said, these are expenditures made on fixed assets, and they are mostly made just during the period of the whole period of the business. It is only made once or twice. So land will be bought only once or twice. So that is why it is known as one-time investment and for long-term assets. Next, the nature of revenue expenditure here is, it is recurring expenses for day-to-day operations. Recurring means repeating. So revenue expenditures are repeated. So just for example, rent is paid monthly or yearly, we can say. Salaries are paid monthly. So these are recurring expenses. The next point of distinction we have here is benefit duration. So when the benefit is received by the business. So this point explains when the benefit of this expenditure is received by the business. So here it is said, provides benefit over multiple accounting period. So when a capital expenditure is made, for example, as I said, suppose machinery is purchased, and that machinery will go for a long time, and that machinery will produce goods for a very long time, and that will earn revenue for the business for a very long time. That is why it provides benefits over multiple accounting periods. So it is not that the machinery will only produce goods only for 1 year, only one accounting period. It is not so. It will keep on working till it gets exhausted or till it stops working. So it gives its benefits over multiple accounting periods. In case of revenue expenditure, it is consumed within the same accounting period. So as I gave the example, rent is paid only for a particular month or a particular year, or salaries are paid only on monthly basis, and for salary is paid, why? Because the employee has worked for a particular month, and the salary is paid for that particular month. So the benefit is consumed in that particular month itself. That is why it is said revenue expenditure, the benefit duration is consumed within the same accounting period. Now in the same question we had this: distinguish between capital receipts and revenue receipts. So again we will go by the definition. Here the definition of capital receipts is: capital receipts are those receipts which are not obtained in the normal course of business operations. Okay, so what is the normal course of business operation? Normal course of business operation means, why does a business starts? To earn profit, to produce goods, to sell them and earn revenue. This will become the normal course of operation for a business. But suppose so a business will produce goods and sell the goods, but suppose a business sells its plot of land. That is not a good, that is a fixed asset. So when it is sold, the land is sold, it will receive a huge sum of money. That will be a capital receipt, and that is not a normal course of business operation. So we can say selling of a plot of land, the amount received by selling of a plot of land is a capital receipt. So this is the definition. Capital receipts are those receipts which are not obtained in the normal course of business operations. Again, the definition for revenue receipts are: revenue receipts are those receipts which are obtained in the normal course of business operation. As I said, what does a business do? It produces goods and sells goods, and it earns revenue. So when the business sells goods and earns revenue, that revenue is known as revenue receipts. So it is a part of the normal course of business operations. Next basis of differentiation we have is recurring nature. So capital receipts are non-recurring. As I gave the example, selling of a plot of land. The business person will not sell a plot of land monthly or yearly. So it is non-recurring. Non-recurring means non-repeating. Next, revenue receipts are regular and recurring. As I said, selling of goods happens regularly for a business. So these are regular and recurring. So here we have the example. Example is, in case of capital receipts, sale of fixed assets, loans and capital contributions. So selling of fixed assets like selling of land, machinery, loans taken will come under capital receipts, and capital contributions received will be the examples of capital receipts. Next, the examples of revenue receipts are sales revenue. So when the business sells goods, the revenue received is known as sales revenue. Then service income, when the business provides service to its customers, the income received is known as service income. And interest earned on loans. So these become the revenue receipts of a business. So these were the point of distinction for capital receipts and revenue receipts. Now we have the third question here, that is, distinguish between the following, that is capital profit and revenue profit. So we will understand the definition here. What is the definition of capital profit? Capital profit refers to the profit earned from non-operating activities or transactions that are not part of the regular business operations. So again, they are non-operating the profit earned from non-operating activities. So for example, if when a business started, it bought a plot of land for suppose 10 lakh rupees. Now after 5 years, the businessman sells the same plot of land for 15 lakh rupees. So there is a profit, but this profit does not come from the regular activities of a business. It is non-recurring in nature. So it will become a capital profit. So if the plot of land is bought for 5 lakh and it is sold for rupees 15 lakh, the profit here will be say 10 lakh. So that 10 lakh will become capital profit. Next we have is revenue profit. So the definition goes like this: profit earned from the regular operations of a business excluding non-operating income like interest or asset sales. So these are the regular operations. So when a business sells goods, the revenue or the profit earned is known as revenue profit. So if suppose a product is the cost of producing a product is rupees 10 and the business person sells it for rupees 20, the profit here will be again rupees 10. Again, this happens in regular course of the business. That is why that profit will be known as revenue profit. Next point of distinction is nature. Again, capital profits are non-recurring, that is they do not keep on repeating. Revenue profits are recurring, that is they keep on repeating, just as I gave the examples. Next is accounting treatment. Again, the capital profits are shown in the capital reserves in the balance sheet of a business, and revenue profits are shown in the profit and loss account of the business. So these were the point of distinctions.